Good morning, I'm Chris Beach and welcome to Chart the Markets on IG Live. And after yesterday's positive session for markets, that Tesla upgrade from Morgan Stanley really giving sentiment quite a bit of a lift. Things have soured slightly overnight, really. European markets certainly struggling. The FTSE 100 up about 35 points in early trading, so given a bit of a lift. You had overnight reports that the Chinese property giant Country Garden, which of course is struggling to get a lot of its bond payments extended, has succeeded in, or has signs that some of its creditors are happy to extend those payments, thus giving the company a bit more of a lease of life. But that saga has plenty of room to run yet. But nonetheless, that helped to stabilize sentiment overnight in Asian markets. But of course, yesterday and today, really, despite obviously the UK economic data, which has been key for the pound as we'll see in a little while, we're still very much in waiting mode. US CPI tomorrow, of course, and then the ECB on Thursday. And both of those events, I think, really you've got plenty of upside risk in terms of the data, because for the first time, US month-on-month CPI is expected to rise for the first time in a number of months. And those of you watching the oil price will be able to understand why, because that's really, I think, giving people a lot of pause in thinking that inflation is done and is going to continue to head lower, because obviously if a headline inflation, that rise in oil is going to be a bit of a problem. Less so for core, but even so, that's definitely something that perhaps disrupted the narrative of expecting the Fed and others to maybe be broadly at the end of their hiking cycle. So that's the first thing to watch for tomorrow, that US CPI reading. And then, of course, the ECB on Thursday. Now, that's quite finely poised, I think, in market sentiment and market pricing, that they would actually hike once more. There's an argument that they should pause now, given the raft of poor Eurozone data we've had over the last week or so. But with inflation so strongly above the target in the Eurozone, it does look a bit odd if the bank, which officially is committed solely to fighting inflation and nothing else, then begins to stop hiking when inflation is so high. So those are the two key events of the week. Of course, the latter of those will be covered live on IGTV, so don't forget to tune in for that on Thursday. But this means that overall, we're not seeing too much volatility so far this morning, in a repetition of what we had yesterday. UK data, of course, seeing this morning a bit of a really nasty surprise in many ways for the BOE. Slight rise in the unemployment rate to 4.3%, but average hourly earnings for the 3 months of July, including bonuses, rising very strongly by 8.5%. That was more than expected. So it shows that not only are wages continuing to rise, and that of course feeds through into inflation as well, but actually the unemployment is beginning to rise. So you're getting perhaps the worst of both worlds, certainly for the Bank of England, that they're seeing weakness in the economy, but signs still that inflation is very, very strong. So that complicates their lives just a bit more, as if things weren't tough enough already for the Bank of England. Otherwise, not too much in the way of heavyweight news this morning, but perhaps some of that positivity from China overnight feeding through into the FTSE 100 this morning as it pushes on higher. Certainly doing better this European counterparts, and US futures looking a touch weaker after a better start of the week yesterday. Moving over to the indices, starting with the FTSE 100, currently trading at 75.24. And for another day, we're making a push towards this 100-day moving average, which was a sort of repetition of what we had in yesterday's session, really. The FTSE did rally towards 75.50, but couldn't hold on to those gains. So that's interesting. Of course, this index still really looks the weakest among a lot of these major indices, really. You've got very much the makings of a downtrend here, although, interestingly enough, we're not really seeing the lower highs, because, as we pointed out before, there's this whopping area of support, really, around 72.50 or so into these lows. This zone, as I would argue, for a zone of support. Every time the index has dipped into this since March, it's found buyers. So that's an interesting point, and sort of at the moment limits the bearish case, really, at least in terms of price action. It would need to go back below that to really be a sustained move. But we do have, of course, lower highs coming through here. And even though last week's sign of a lower high, we thought this was really faltering at the 50-day and might then drop and continue to drop, it then recovered along with the broader market, of course. So this is the problem with indices. You can't really always view them in isolation. They do have to be taken as a group. They don't always move in lockstep, but sometimes clearly other movements affect individual indices. So the index recovered, but really we are, of course, still below the 100-day moving average. Crucially, we're still below the 200-day moving average as well, which does put us more firmly in the bearish camp, I think, really. And then, of course, you've got plenty of trendline resistance that needs to be tested and broken to the upside to try and sustain a more optimistic view in the short term. So for this one, we'd need that close above 7,600 and then really above that 200-day moving average to say, okay, maybe things look a bit more optimistic. And even then, you'd need that close above 7,700, the late July high, which is where that downtrend line was created, really. You hit that, and then it slumped dramatically. So a replay of that takes us back down to 72.40 could be very interesting, I think. So for the moment, short term, the buyers have wrested control on this one in the short term, but the medium term still looks less encouraging, I think. Maybe long term, the buyers still have the advantage, but they certainly have had a tough time of it since February because you've seen it drop back from record high. And while they've, as I say, they've stemmed the selling around 72.50, they haven't really been very strong since then, I think. And that seems something that we do get a lower high below 7,600. You could argue maybe the sellers will try their luck with this one once more. After a strong day for European markets yesterday, and that followed on from the recovery on Friday, we've seen the DAX actually weaken in early trading this morning. So reversing some of that bullish view that we thought we had yesterday. You had a recovery in stochastics over the course of the past 3 or 4 sessions, but the MACD again faltering. So that doesn't look too promising either for the buyers. That said, it's the perennial problem here of the break below support, because we're testing again this 15,700 level that, as you've heard me mention many times before, has been so important since April. And then below that, you've got this interesting confluence of this support zone, again, really around 15,550, and then the 200-day moving average as well, which we've yet to really touch at any point this year, or indeed into the back end of last year, not since we broke above it in November and this huge rally began. So that's an interesting development, but it's notable that the buyers have been unable to hold this one today. And then we've dropped back again. So slightly more negative view prevailing in European markets. And unsurprisingly, of course, because if you do get maybe a strong US inflation print tomorrow, that will probably hit indices as a group. And of course, if the ECB is more hawkish on Thursday, if it hikes rates and maybe talks about even more hikes, which I think is a possibility, then that would also put pressure probably on European indices too. So you can understand why the buyers don't really feel too confident at this point in time, and are certainly very cautious ahead of the ECB on Thursday. Moving on across the US and the Dow, this has had a better time of it. The futures weaker in early trading this morning. Notably, yesterday we did have a good day, and then we just couldn't hold on to the gains for the session, so they actually finished well off the highs of the day and stuck below the 50-day moving average for the time being. I think the other thing to bear in mind is that you've perhaps seen a test of this, you could argue, for rising support from those May lows, so that's held for the time being, and arguably gives the buyers some kind of short-term advantage. There's more to be done, of course, a lot more to be done. And if the index gets back above, say, 35,890 and back above the 50-day moving average, ideally it needs to get back above this late August high at 35,000. Then you could argue for a fresh breakout to the upside, which puts those highs from the beginning of August, 35,600, into play once again. It's still very much in an uptrend. I think you can still make that case very strongly. The moving average is still in the right order as well. We're above the 200-day, we're above the 100-day, and just below the 50-day for the time being. But overall, I think buyers still have this one probably in the short and indeed in the medium term as well. I think it's just understandably, again, it's the nervousness ahead of the CPI print tomorrow that we need to be aware of, really. But a close above 35,000 would be the catalyst, I think, to say, yes, okay, we broke into the upside once again, and maybe we're seeing a rally into the second half of the month. Moving to FX markets, so far, of course, aside from that UK data, which we'll come to in a second, it has been relatively quiet. So Eurodollar not seeing much support in the short term, really weakening after the gains of yesterday and after we put in a floor on Monday's session. So heading back, but not quite reaching the support zone from the end of May around 106.70. Close below that clearly really begins to bolster a negative view, because you're getting a very sharp downtrend in place here. So that's something to bear in mind. If it could rally above 108.30, it would be back above the 200-day moving average as well. So that would be a fairly decent performance there for the pair. But buyers certainly struggling to hold on to this one. Again, it's US CPI and ECB, so it'll affect all assets really. There's no escaping it. The big event of the week is still to come. The two big events of the week are still to come. So just not much conviction either way, really, I think, from the buyers or the sellers. Although, as you can see, this huge pullback in euro dollar from the highs of July, really, I think, is starting to send a message that this uptrend seems to have run its course for the time being, and you could be rather skeptical about this one, so long as the price is, as I say, below the 200-day moving average and below those highs from the very end of August, that weak bounce there at 109.20 and then hit by fresh selling. So it doesn't look like the buyers do have much short-term control over this market. For the pound against the dollar, again, I think though you saw that strong wage print this morning for the UK, which might then lead you to think the Bank of England will have to hike again. The fact that unemployment started to rise, and of course you had those comments last week from Andrew Bailey, the governor of the Bank of England, saying, actually, we think we're fairly close to the end of our hiking cycle, really just means that people probably don't buy the idea of further upside in the pound for the time. You'd need to have a big miss on CPI tomorrow and some fairly dovish commentary from the Fed to change that around. It's still dollar strength really making itself felt across the board here. So it looks like cable might be joining Eurodollar in giving up its uptrend that has been so strong this year. And a very decent run it has been, of course, since March, from 118 up towards 131. Things could change, of course. Price action is the most important thing. Back above 126, back above 126.70, and you might argue, actually, yes, we've seen the buyers reassert control. So it could happen. But for the time being, it would be an interesting move, I think, to be buying it down here, although you could at least put your stop, say, down towards 124 if you're hoping for a low to form here. But at the moment, it still doesn't look like one conclusively has. It looked like it at the end of August, and that was then cancelled out by the fresh drop. So the sellers just pouncing on that late August strength to drive the pound. And back, indeed, last week, which was hit its lowest level since early June, really. So not a fun time for the pound against the dollar at the moment. And potentially back below 124, then you've got that May low down around 123 to look out for, and then continue to eat onto that because you'll see perhaps lower highs and lower lows forming a more bearish view for this one in the medium term. And then dollar yen, of course, back at 146, just dropping back over the past few days from that high above 148. It seems interesting to recall that not that long ago we were talking, of course, about the Ministry of Finance in Japan talking about intervention, and that caused that swift drop, which turned out to be that gift for the buyers. And I think, of course, it's easy to look back now and say, clearly you should have bought it down here because it then stabilized and started to rally, and then you did have a bit of a sudden surprise that 4 days of drop and then it recovered again. But as ever with markets, it won't have felt that easy at the time. But sometimes something is just that you have to do. You have to trust the process, and that would have rewarded people brave enough to step in. I think it's just that the time it would have felt like maybe this could turn into something much bigger. But surprisingly, the prices rallied. The dollar has continued to rally with that perhaps more hawkish talk of the Fed, and even the BOJ's talk yesterday really about ending the negative rates policy. It hasn't done much for the yen, which I think is quite interesting. So that's something to bear in mind here, that it's still very much an uptrend. It's not surprising maybe that we're just seeing some weakness after it hit this high, because it does look overextended in the short term. And maybe if you're not long this, what is already a very strong uptrend, you probably want to see a pullback towards 144 rather than trying to chase it up here, 146, 147, or even 148, of course. So something to bear in mind there. But it's showing no real sign of a much deeper pullback yet. Back below 144, 490, and those highs from the beginning of July would be perhaps more of a signal that that has now begun to put some short-term pressure on it, but very much still in the uptrend category. And then turning to commodity markets, gold really just can't catch a break at the minute, as you can see from the price. We thought maybe, well, a series of false dawns here. Not a bad performance in late August, back above the 200-day, but then faltering below 1950. Yesterday, and indeed on Friday, it tried to rally in a meaningful way back above 1930 and couldn't sustain it. And now the dollar strengthening again. So really, the joy of this is that you just need to see how the price is behaving. You can see that it faltered here in mid-July at 1980. It's the brief second half of August rally took us down to 1950, lower high, tick that box. And now it's just flirting with the 200-day moving average. Close below that takes us back on towards the mid-August low. And if it goes back below that, we can really take the view that this uptrend as well seems to have run its course for the time being until proven otherwise. But certainly the sellers will be looking for that swift move back down towards the August low and potentially lower. For the buyers, really couldn't rest easy, I think, unless you get it back above 1950. And that might then say, okay, this has been a long bottoming process, and maybe we can yet drive this one back to 1980 and higher. And of course, it's oil prices where the action is concentrated. And this is the important thing for CPI tomorrow. That it will feed into the headline numbers. This huge rally you've seen in crude since the beginning of July, from down around 67 up towards 87. So very, very impressive bounce. Decent pullback during the course of August, saw the buyers emerge once again, and off we go. And now we're back at those highest level here since the end of November, which I'm sure we will notice at the petrol pump if nowhere else. So from there, the next target to watch becomes that 87 level from mid-November and on. From there, this is the medium-term view, of course, up to 93 levels we haven't seen since the highs of October and November last year. No sign that the sellers have got much in the way of strengthening. Can't even draw an uptrend really at this point. It's just continuing to rally. One day pullback and then the buyers came back in again is a sign, if anything else, that that you've got further upside momentum really building here. And again, it would take that big CPI reading tomorrow. If it was way above expectations and that notably strengthened the dollar, maybe that would give some short-term weakness into the price here. But without any sign of Saudi sort of increase in OPEC production supplies, production output, drive the price down, or a real sustained downturn in economic data that once again revived the idea of a recession, people are continuing to buy oil. And so that's something to bear in mind. Maybe that will have an effect further down the line, but at the moment, the buyers do appear to be in charge on this one, and no sign really of any bearish moves, even in sort of the hourly or the short-term charts, really, mostly buying across the board here. So looking to the rest of the day, it's not expected to be a particularly busy session, really. Again, we're all just in wait-and-see mode ahead of CPI tomorrow. The Dow finished up yesterday around 87 points higher at 34,663. We're expecting it to start the day just slightly lower, 34,600, so just about 80 points lower from yesterday's strong close. So you can clearly see the indecisiveness setting in for markets as we wait for tomorrow's CPI figure. But that's it for me. Thank you for joining us. We will see you again tomorrow as normal at 10:30.